The idea of buying a home has started beeping on your radar. Good for you. You think the first step is to hop on the computer and go to one of those fancy websites that pretends to give you access to all the listings in the market. Hold your horses, cowboys. When you start to think about buying a home for the first or the fifth time, step number one should always be the loan, and the second step should be the home. Now, after you have your qualification, after you have your approval, or after you are under contract, there are 7 things to avoid after applying for a mortgage. My name is Kevin Martini, and this is episode 79 of the Martini Mortgage Podcast, and it is called The 7 Things to Avoid After Applying for a Mortgage.
This is the Martini Mortgage Podcast with Kevin Martini.
Thank you for tuning in to the Martini Mortgage Podcast. My name again is Kevin Martini, and I've been in the financial services since the late 80s, and I've exclusively been in the mortgage arena in Raleigh, North Carolina since early 2006, and I have seen the pain when a family falls in love with a home, and then they reach out to a mortgage lender, and they do not qualify for the home that they fell in love with. I've seen families do things the right way too. They consult with a mortgage lender to find out what they're able to buy, and then they go find the place. However, while their loan is in process, they decide, regardless of the advance advice they have received, they go and get the furniture for the new home on a new charge account that they have open, and this new charge account impacts their credit score and their debt to income, and their approval is no longer in play for the home they are under contract for. Yes, things happen. However, you can be proactive to make sure it does not happen to you. There is no question that buying a home is exciting. However, to make sure that everything goes flawlessly, you should always get your loan first and then find your home. And after you have your approval, there are 7 things you should avoid after applying for a mortgage. Number 1 thing to avoid after applying for a mortgage is do not change your job or the way that you're paid at your job. I know this sounds pretty darn obvious. However, it happens more than you think. You see, a mortgage underwriter tracks the source and the amount of annual income. They also look at your employment history. Number 2, things to avoid after applying for a mortgage is don't deposit cash in your bank account. Now, I know what you are thinking. Cash is king. However, it's not king when you're getting a mortgage. Mortgage underwriters need to source your monies, and cash is not often traceable. Here's a tip. Before you deposit cash in your bank account, call your mortgage strategist to discuss if there is a potential way to document the cash deposit. Number 3, things to avoid after applying for a mortgage is don't make any large purchases like a new car or furniture for your new home. When you purchase something big, normally new debt comes with it, including new monthly obligations. New obligations create new qualifications that will be needed to be met. With new debt, there is typically higher debt, and that higher debt impacts your debt to income ratios. Higher ratios makes for riskier loans, and sometimes qualified borrowers are no longer qualified after that new debt. Number 4 thing to avoid after applying for a mortgage is do not co-sign other loans for anyone. When you co-sign, you are obligated. As we mentioned, with that obligation comes a higher ratios as well. Even if you swear you're not the one making the payments, a mortgage underwriter will have to count that payment against you. Number 5, things to avoid. After applying for a mortgage, do not change your bank accounts. Remember, mortgage underwriters need to source and track assets. That task is significantly easier when there is consistency among your accounts. Before even transferring any money, talk to your mortgage strategist. Number 6 thing to avoid after applying for a mortgage is do not apply for new credit. It doesn't matter whether it's a new credit card or a new car. When you have your credit report run by an organization in multiple financial channels, i.e. a mortgage or a credit card or auto, etc., your credit scores will be impacted. Lower credit scores can determine a higher mortgage rate, and that higher mortgage rate might impact your eligibility of your approval. Last but not least, number 7, thing to avoid after applying for a mortgage, do not close any credit accounts. Many clients have this erroneous belief that having less credit available makes them less risky and more likely to streamline their approval. This is wrong, folks. A major component of your credit score is your length and depth of credit history, as opposed to just your payment history, and your total usage of credit as a percentage of available credit. Closing accounts has a negative impact on both determining your credit score and your debt to income ratios. Any blip in income, assets, or credit should be reviewed and executed in a way that ensures your home loan can still be approved, and that is why one should only work with a local and trusted mortgage strategist. I have found the best advice is to fully disclose and discuss your plans with your mortgage strategist. If you're looking to buy a home and secure a mortgage in North Carolina, then I suggest you give me a call or someone at the Martini Mortgage Group at Benchmark Mortgage at Jingle before you do anything financial in nature. You will find that we are different than other lenders. We guide you through the process and beyond. In closing, don't let your dream become a nightmare. Avoid the 7 steps. Don't change your job or the way you're paid on your job. Don't deposit cash into your bank account. Don't make any large purchases like a new car or furniture for your new home. Don't co-sign other loans for anyone. Don't change bank accounts. Don't apply for new credit. Don't apply for new credit. And do not close any of your current credit accounts. Buying a home is a process. It's not an event. And the mortgage strategist you select should be with you before the home, during the loan process, and post-closing to get you debt-free as quickly as possible. That is what I do with the Martini Mortgage Group. This is what Logan Martini does with the Martini Mortgage Group. And this is what you can expect when working with the Martini Mortgage Group. Thank you for tuning in to this episode of the Martini Mortgage Podcast. Thank you in advance for sharing this episode with someone that may benefit. And thank you for leaving a 5-star review.
The Martini Mortgage Group makes real estate dreams a reality with trusted advice in a stress-free environment with great rates and on-time closings while providing a world-class experience. If you or someone you know has questions about the current mortgage rates or the current mortgage programs, please reach out to the Martini Mortgage Group at 919-238-4934. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal Housing Opportunity.